Hello traders, Nick Shaheen here looking at Netflix. They just reported earnings. The stock spiked, first fell, spiked, and then ended up a little bit. Okay, so disclosure. Nothing in here is actually a recommendation to trade it. I'm going to share my opinion based on the fundamentals and my opinion based on the charts. I'm a blend as far as how do I trade. I use the fundamentals, but I definitely rely heavily on the charts. I believe they have more truth in them than the news do. So if I have the options between trading purely on fundamentals or purely on charts, I will choose charts. Okay, so having said that, the initial reaction, the knee-jerk reaction short term for earnings is always binary. You know, if I read the report yesterday, I could have, if they told me what they were going to say yesterday, I would have told you the stock was going to go down. And I'll explain why. Also, another housecleaning thing. At the end, there'll be a subscribe button that pops up somewhere on the left-hand side. Do that. It's free if you don't already subscribe to my video channel. I also may sound a little out of breath. I'm still recovering from surgery, so I may speak in a choppy manner. Okay, so back to the point at hand. This is a daily chart. Let me make sure that we're looking at a 1 year. Okay, this is about a 1 year worth of data on Netflix. This is the reaction to the earnings this time around, and this is a giant reaction to this time. So let's talk about the chart. I mean the report. So first of all, Netflix is a growth concept. That's how Wall Street prices it. They give it a high valuation, and it is indeed high valuation. They burn billions, literally. I cannot believe, you know, it says the PE is 115, but you know, I challenge that. But anyway, it's about 8 times sales, 23 times book. The book value there is kind of cheeky because they have I've read that they have off-book commitments. So it's not debt, but it is debt, but it's not official debt. So they spend about 18 billion, I think, 15 to 20. The number keeps moving around for content production a year. Oh my gosh, that's insane. And a whole bunch of competition coming, and the competition is big guys. I'm not worried about Apple as much as Disney. Apple with only $5 price per family is not going to be much competition because they're not going to spend so much money on content when they're only charging $5. Okay, so the report itself is not what Wall Street should have wanted to see because they missed on the top line, they beat the bottom line. That's okay for a mature company. But if you're pricing a company so high, 130, whatever it was, 119 PE, you allow it to burn cash like crazy, then you expect big growth. You can't miss the sales. You can't have big growth when you're missing your sales, the top line, you know, the revenues. It's okay to miss the earnings. Amazon was, you know, not worried about its earnings for a decade. But look at the reward they got. They grew sales exponentially. They more than doubled their sales in like 3 years. So that's what an aggressively growing company does. They burn money to grow really big, and Wall Street doesn't mind as long as you're getting the growth. So yesterday's miss in the top line, to me, was alarming, and I thought that it would fall. More importantly, they also missed on the subs, the new subs. So they kind of masked it by two things. They said U.S. was the drag. Okay, so we have 250 million people here, 300 million, versus billions overseas. So they said, don't worry about the subs miss. It's because of the U.S. The subs overseas is growing according to plan, apparently. And they also said we're going to start producing content in different languages. So that to me is saying we kind of missed our subs, and we're going to muddle the fact, and we're going to probably spend more billions because now we have to make, you know, TV in Spanish and stuff and other languages. So concerning report at best. So the only explanation to a pop is it's a relief pop. What does that mean? The expectations were so bad that this is a thank God they didn't deliver something like as bad as this one here. So the reaction here was tremendous. So this is a relief that, oh my gosh, thank goodness it wasn't a report like this one. Bottom line is, if you tell me, is this a good opportunity to buy Netflix? No, for a lot of reasons. Not because I don't like the fundamentals, not because I don't like what they reported, because the chart tells me so. Okay, so this, first of all, it couldn't hold the highs. The highs were impressive, but it couldn't hold. It still closed up 2.5%. Not impressive in such a wild stock, but it does put the bulls in charge, kind of, maybe, almost. So this is a year worth of data. Okay, let's talk charts now. All right, maybe I went on a couple of tangents earlier. Sorry about that. So fundamentals are what they are. I believe what I believe. You can believe what you believe, and we can agree on the stock price. So you'd be surprised what I'm going to say next, maybe. So we'll see. All right, this highlighted zone is where it's called the value area for this period of time. So this is where, of all these ticks, this is where the action happened the most, specifically in this spot right here. This peak and this peak. So that's why this was support. Look at this little box. I didn't mean to put it there because of this. I put it there because of this cluster the other day. So look how it coincides pretty nicely with the second highest volume point. So this is called a point of control from a volume profile perspective, technically speaking. And this is like a secondary volume point of control. So when it had its dizzy, when it lost this, you know, right here I said it was tight. We were going to get this or that. That came quickly. But then it was support because of, we have to look left. This is the Christmas crash. And everything was bad in the Christmas crash. The macro, all the news, the Fed, everything was bad. So this wasn't the case here. The Fed is on our side kind of a thing. So it should have been support, and it was, which was good. So now the stock is back into this zone because this is where it closed. So we are right here, exactly. So these zones are sticky. So if price is falling and they hit a zone like this, I expect it to bounce at least once, okay? Because it's literally where buyers and sellers agree the most. So once it gets there, and if machines are trading, they're going to do the same over and over. So on the way up, once you hit that same zone that is highly traffic, think of it as a traffic jam. There's a traffic jam there. You get to it, you're going to have to slow down. You can't just burst through. They tried. So now the work is, onus is on the bulls that indeed, if they believe going forward that this report was not just, that this was not a sigh of relief, that indeed that this gives them good new information that they can follow through. So I expect it to do this, chop around here to establish a base above this and build itself back up. Okay. So everything I said for this line will apply again for this line, will apply really big time for this line. And I'll explain those two lines in a minute. So if I'm long the stock, the sigh of relief gave me money. I can cash it in, or I can say I was right. This new information, my thesis is even stronger. I'm staying long. Nothing wrong with that. You know, you need two sides of the story in order to make this work. Okay, so I would ride it, but I will expect another line of resistance here, from here. In fact, look at what happened here. The very peak. That's not a coincidence. This is where there was a cluster of fights. So it's a memory. I mean, markets charts have memory. So even if we go up, they're going to stall at 310, and if they take it out and they continue on up, this is like the best case scenario I'm drawing for you if you're a bull. They're going to hit this zone, and this is an even fiercer battle. Why? This was on fundamentals. I mean, they had a real reason to do this. Can't remember the numbers, but they had a reason. So when they get to it, they have to battle this, the reason. Okay. I have a new phone. I think I'm going to throw it out the window. It's one of those combinations where it rings your cell phone into your home phone. Like, why do I need this? It rings like you wouldn't believe. Anyway. So, sorry about that. Let's see if I can keep my train of thought. This is a big battle line because not only they have to battle the reason, this one, they also have to battle the technicals. And this technical is really important because watch this. Way back before this happened, way back, this was a very important level. And we're going to zoom out. Look at this. I can see here that something happened here. But let's not go that far. Let's start right here. this rally was incredible. I remember writing about it, and I remember writing it up too. They broke up, support, kind of, and then whoosh. So this is an important level for several periods of time, and it's likely to be another battle zone. And remember this box I drew here? That's the value area high. Remember we said that this is the value area. This is where bulls and bears agree the most out of this whole period of time. And this is the edge of it. So anything here is by definition unusual or less frequent. So once you hit it and get up there, you shouldn't be there unless you're breaking out. So they go above it and they come back to it and then they continue on up, right? So it is, trust me on that one, this is going to be resistance. All right. So the charts say, I'm going to just summarize it, regardless of the fundamentals, this could be ABC company, I don't care who it is. It says, I don't buy today's tick. I would wait to see what happens in the next few days. Job number one, I want this base to hold. If it doesn't hold, this candle means nothing. I have to know that this is heavy resistance. Let's put it this way. This is magnetic. So if you're going up, it's going to slow you down. If you're coming down, it's going to slow you down. It's going to be magnetic. Okay? And this zone, there's going to be another battle, and there's going to be another battle, and this is really big battle. So I have to see what happens in the next few candles. I could reduce it to a lower time frame if I'm an active trader. So you can see how the pop and then faded all day. It's not a bad tick. It's just not as great as the media made it out to be. I don't think it's good. So here you can see why. Look at this. This is today's high. And look how it matches up with this one. This one. So this is a ledge. It's an accident scene. This is a ledge, an accident scene. And okay, so now the lower time frame tells me something else. Why did they close below this ledge? Right here. So now the point of control for this period of time is right here, 293.5-ish. So this better hold. Okay. Now you see why technicals really gives me some things to talk about. This is the cluster I said they better hold. It's a tight cluster, lasted a few bits before the earnings, and if they come back to it, which is okay, they should hold it because they need to. They say prior resistance becomes forward support. So you can see that this is like an ABC push. Those of you who like those, they should do this. That's okay. It's not bad to come back to it. Maybe even go a little bit lower, but to come back to it and then fall through it. So if I had a stop, this would be a stop, because that's like a why why lose it, and this is going to be resistance, definitely. So if I were to put another stop, this would be another stop, and another one here. So it depends on my time frame. So this is the same cluster I told you. I consider this support until it's not. All right, so you see how charts can tell a story, depends on the time frame. Like a faster trader would care about this time frame. Maybe they'd even slice it to a 5-minute. It all depends. Or if we go back to a daily, I'm going to scare you. All right, I'm not a Netflix hater. I'm just merely pointing out. This is a weekly chart. Every candle is 1 week. This orange line concerns me a lot, and it's not that far off. Okay, it's $254. And it's not a hard line in the sand. There's this one, and then there's this cluster here, whatever the heck happened. And then there's this candle. This candle from January 2018. I don't know what they said on that earnings report, but if it's no longer true, they're going to price it out. Okay, so this better hold, and if it doesn't hold, this better hold, and if it's not, that means that the story that they told here is gone, which means that technically this is like an inverse cup and handle, and then we're talking in the below 200. I'm not calling for that. I'm just saying technically if we lose this zone, then the bears will start selling. They can press the short. That's my opinion. And the next line of defense would be this cluster right here. I don't know where that red thing comes from. So let's go to a monthly chart. So this is, every tick is 1 month. Eliminate the clutter. Okay, so $150, $140 a share. I'm not saying it's going there. That's that funky candle that we're still seeing if it's true or not. All this should be support. This should be support. This should be support. But you take it one level at a time. All right, next signing out. This is a lot longer than I expected. Apologize, but I think it's pretty important stock, and a lot of people invest in it willy-nilly.